Imagine a bustling Dutch coffee house in the early 1600s. Merchants huddle around tables, not just for coffee, but for shares in a global trading company. This simple act of buying a piece of a business would unknowingly set the stage for one of the most powerful financial systems in history, the stock market.
Hey everyone, welcome back to Assetly Academy, where we turn complexity into clarity, breaking down money, investing, and financial growth so you can make smarter financial decisions.
The origins, spices, ships, and shares. In 1602, the Dutch East India Company, or VOC, was founded. It wasn't just any company. The VOC could trade with Asia, establish colonies, mint coins, and even maintain armies. To fund its massive fleets of ships carrying spices, silk, and porcelain across the world, the company invited everyday citizens to invest. By buying shares, these citizens became partial owners. Each voyage promised profit or risk. And this was revolutionary. For the first time, ordinary people could invest in businesses and share both the risks and rewards. Soon, Amsterdam became the hub of a formal exchange. Citizens traded shares in coffee houses and shipping ports. Some investors earned returns as high as 40% in good years. But with high reward came high risk. Storms at sea, piracy, or political conflicts could wipe out a voyage, and with it, investors' fortunes. This system, pooling money from multiple investors to fund ambitious projects, was the birth of the modern stock market. As trading grew, so did speculation. In the 1630s, the infamous Tulip Mania overlapped with speculative investment in shares and commodities. Prices soared, then crashed, reminding investors that markets were fragile and emotions could be as powerful as logic. The VOC itself eventually declined in the late 1700s due to corruption, competition, and administrative costs. But the concept lived on, raising capital from many investors, sharing risk, and trading ownership in companies became the blueprint for global financial markets. The modern stock market. Now, let's fast forward to today. Modern stock markets like the New York Stock Exchange or London Stock Exchange are massive, technology-driven networks connecting millions of investors across the globe. But the fundamentals remain the same. Companies raise money by issuing shares, and investors buy them hoping for future profit. Here's what the modern stock market does. Capital raising. Companies go public through IPOs to fund growth, expansion, or innovation. Ownership and voting. Shareholders become part owners and sometimes influence company decisions. Liquidity. Shares can be bought or sold easily, giving investors flexibility. Price discovery. Market prices reflect supply, demand, and future expectations. Economic barometer. The market often reflects investor confidence about the economy. It's a living, breathing system where every action, from buying to selling, ripples through businesses and economies. The bigger picture. Here's something. The stock market isn't just about buy low, sell high. Fueling growth. Companies use capital to innovate, hire employees, and expand globally. Wealth effects. Rising stock prices make investors feel wealthier, increasing spending and boosting the economy. Resource allocation. The market directs funds towards companies expected to create value and away from those that aren't. Global interconnection. Stock markets react instantly to events worldwide. Technological advances, policy changes, or crises. Risk and regulation. Markets can swing dramatically, and investor confidence can influence everything from economic growth to financial crises. It's not just trading, it's a dynamic ecosystem shaping economies and lives.
The modern investor. In centuries past, investing was reserved for wealthy merchants. Today, anyone with an internet connection can invest. You can buy shares in global companies, support businesses you believe in, and participate in building the future. But access comes with responsibility. Understanding risk, doing research, and thinking long-term are key. Many experts advocate a patient, long-term approach rather than chasing short-term gains. Markets move on both facts and emotions, so steady, informed investing often pays off more than chasing every headline. From 1602 to today. From the VOCs, spice ships, and coffeehouse trades to today's digital global markets, the stock market has evolved but stayed true to its core purpose, helping companies grow, sharing risk, and connecting investors with opportunity. And beyond trading, it shapes economies, jobs, innovation, and wealth. So next time you hear about an IPO, a market rally, or a crash, remember, you're witnessing a system that began with merchants and spices, but today impacts billions of lives worldwide.
If you found this video helpful, don't forget to hit that like button. It really helps us reach more people who want to learn about personal finance and investing. Make sure to subscribe and turn on notifications so you never miss our weekly videos that simplify the world of money and smart decision making. And if there's a topic you'd love to learn about next, just drop it down in the comments section below. We read every single one, and your idea might just be our next video. Thanks for watching, and we'll see you in the next one.